So in recent legislation, we had a change of a period of previously 5 years to 3 years, where the proceeds from the sale of certain shares would be seen to be capital in nature almost exclusively, rather than having to make a determination of whether they're capital in revenue. This affects obviously the rate at which the proceeds are taxed.
Yes.
Because capital proceeds are taxed at a lower rate depending on who the taxpayer is, as opposed to revenue proceeds.
So they've reduced the period from 5 years to 3 years. If you hold the shares now for a 3-year period and you sell them for after 3 years, you're not going to pay the normal income tax rates on your proceeds. You're only going to pay capital gains if you've held those shares for more than 3 years.
That's correct, yes.
Now, what happens if you purchase those shares with a capital investment intention, and before the 3 years expires, some emergency situation arises and you're forced to sell those shares?
There's no change in the law in that respect. You still, as long as you can show that they are capital in nature, the acquisition was capital and the disposal was capital, it's still capital in nature.
So you still have the original principles that back you up if you can provide sufficient
That's
proof,
correct, yes.
even if you do have to sell within the 3-year period.
Absolutely correct.
Why do you think it was necessary for them to change the period from 5 to 3 years?
Well, there's always been difficulty with the sale of shares and showing intention, and we've got conflicting court cases setting up the principles around it. So a number of years ago, the 5-year rule was introduced, but that was an elective rule, and once you elected in respect of a listed share, because it only covered listed shares, that was it for all your listed shares that you ever held.
So now it's been simplified?
It has been simplified, yes.
And does it affect all shares?
It affects all shares. It affects interests in close corporations. There are certain shares that are taken out of this, mostly as anti-avoidance measures.
So private companies, public companies, close corporations,
even certain foreign shares listed on the JSE.
And again, the elective process doesn't work because
Correct.
you simply hit the 3-year period, and post that period it's regarded as being capital in nature.
That's
now,
correct.
Just explain the workings by means of an example, if you can.
Well, you acquire the share, you hold on to it for 3 years. When you sell that, automatically those proceeds are deemed to be capital in nature, which means that if you previously had, because you're a share dealer, you may have deducted certain expenses or something like that because you thought it was revenue in nature, those previously deducted expenses are recouped and they're added to the base cost. So you get your proceeds, you subtract the cost of the shares plus anything that's been recouped as base cost, and after that deduction you get a capital gain or a capital loss.
So the fact that you are an out-and-out trader makes no difference. Once you hit that 3-year period, then you're forced into the capital gain scenario.
That's correct, yes.
So is there anything there that share traders should be aware of to try and overcome that difficulty? Because there may be instances where they would want to hold those shares for longer than 3 years and still trade with them.
Absolutely. What a share trader needs to do is critically watch that 3-year period, and if they are holding shares that are subject or may become subject to that and they're in a loss position, they need to sell those shares to realize the loss before the 3 years are up, and maybe reacquire them.
Thank you very much for that very useful information. Those of you who would like to read more about this interview, please look out for the next issue of the Tax Talk magazine. You can obtain copies by logging onto the website taxtalk.co.za, or you can telephone them on 0861 829 825. Until next week, goodbye.